What is up, everybody? Happy Sunday. Welcome to the Sunday Open with Nick4aTick. I'm Nick. How's everyone doing? How was everyone's weekend? I don't know about you guys, but this was not my best sleeping weekend. Anyone can imagine some weekends with a 6-month-old are a crapshoot. We unfortunately running off a few hours of sleep tonight, last night. Hopefully tonight is better. Excuse me, but yeah, it's been a rough weekend for me, despite some great weather here in DFW. But how did everyone do this past week? More specifically, on a Friday, I think more than anything was a bit of a snooze fest early, and then things got violent to the downside, and then violent back up to the upside. And we'll talk about it. We'll talk about where we may go from here. This is starting to feel like the dog days of summer if you look at the last 3 weeks of trading. But welcome everybody. If you're just kind of rolling in, if you've never seen this show before, we do some light prep. We talk a little bit about where we may go, how things have been trading in the big four as far as ES, NQ, CL, and gold. And I may even have a little surprise for some of our boomer traders out there, maybe trading the boomer index. I may even do some light analysis on the YM tonight. We'll see if things get a little crazy. I'm not quite sure. So yeah, we're gonna talk about them. We're gonna talk about the earnings this week, as well as what's on the economic calendar front. We're pretty much after Nvidia cleared us all out, I think, on Wednesday, and gave everybody, I think, hope for a new all-time high in the early part of the after-hour session. That was quickly slapped down at the top of balance. And so, yeah, we'll talk a little bit about the end of the earnings season before it kind of restarts again into summer, but we'll see how things are trading at that point. I'm not quite sure if this is going to be a slow death march to new all-time highs, or if Trump is going to continue to keep us on our toes. Every day seems like you just kind of you're a little on edge, just waiting for something like we saw on Friday. And then you get something like end of month flows coming back in to push us right back to the center of balance. So with that being said, let's go to the charts, shall we? So we're on my execution chart. I wanted to very quickly talk a little bit about Friday, just because I think a lot of us may have called it a trading session early, or at least if you weren't paying attention after the Euro close, when Trump was once again talking about his favorite country, China, and naturally we fell down the rabbit hole, back down almost basically to 58.50 on the SPX, and then naturally options and some end of month flows kind of drifting us all the way back up to the center of balance. So another one of those days where the better trades came later in the session and I'm not at my desk. In fact, some of my trading buddies can probably timestamp me in one of the discords out there in the space, where I basically right around here said, you know what? Good enough for me. We were trading around the Leo's lovely opening range mid, which continues to act as a good potential swing for the session every day. The 5-minute opening range mid just seems to provide some trading opportunities, whether you were taking some initial shorts off the open, or were looking to kind of re-offer it as we were trending down on the day. So continuing to add even some resistance in the afternoon. But right around here, I called it a session, and naturally the white van guys and the market makers watching my house clearly decided that was the perfect time to just sell us down right after that Trump tweet came in. So gives me a good reminder that sometimes, I mean, these are going to happen, but I'm still going to be who I am, which is usually after Euro close, if I'm not seeing anything in particular, I'm going to call it a session, especially on the Friday, especially Friday in the middle of summer. It's just not necessarily the tape that I'm going to be sit there and trading day in and day out. I'd rather go touch some grass, go enjoy the sun, and have better things to do, knowing that I'm going to potentially miss some better trades that are coming. So it is what it is. But with about 10 minutes before the open here, let's start talking a little bit zoomed out. So I made this joke on Twitter, but we are basically, last week was basically a balance inside another balance. And if we go back to the all-time highs, below another set of balance. So where do we go from here? Looking at this, not very far until we actually break out of this balance range. For the time being, guys, I mean, we basically are going to be wedged what looks like between 5850 and 6000 on ES and the SPX options chain as well. It just seems like we're going to continue to kind of be range bound until a larger player ultimately makes a decision here. Last week's value area was super tight. In fact, we basically extended it to the upside kind of after Nvidia's earnings, excuse me. And then we sold right back down to the point of control and basically just we're chopping in there. Even on the right here, when you see the last 5 days of trading, very similar. That point of control is basically where we ended up closing on the session on Friday, being around 59.20. So 5900s on the SPX chain still going to kind of act most likely as a pivot in the side of this balance, basically 100 points each way at least, is just a decent way to look at this. I'm not too interested in kind of initiating a lot of trades. I would say right around 5900s. I'd likely play the edges for those balance breaks, depending on which side of last week's value area we're kind of trading. So if we get a below 59, 58, 96, kind of looking to see, do we find anyone actually stepping in to hold us firm there, or are we going to go back down and retest the lower side of this balance down towards the 5850s, 5855s, kind of acting as the resistance for the time being. And then to the upside, I don't know, we weren't on last week with the Memorial Day holiday, but if you guys remember, I was talking, I guess it was like 2 weeks ago now. But basically that I thought it was going to take a little bit of effort to really see us start to get a volume build back inside the old balance area between 62 and basically 6,000s, which goes back to kind of January and the all-time highs before that February OPEX day, when we just kind of started flushing and have now continued to kind of rebid and are just building volume back up in some of these areas. But I think it's going to take a little bit of force and hopefully some positive news. I don't think the tariffs on, tariffs off narrative is going to be anything that's going to push us back on. It just seems like it's still uncertainty, and that gives the market another reason to continue to balance and, find buyers in lower prices currently. So for the time being, I'm still in favor, unless it's positive news driven, to looking for those reoffers at the higher edge of this balance in kind of the 5970s to kind of the 5980s. Once we get back above this, basically the top of edge of this balance range, and even if we clear these value areas from the last 2 weeks, I'm not as big of a fan of kind of initiating longs there. I'd rather just kind of be waiting and seeing, knowing I may miss out on, an extra push back above 6,000s, kind of what we saw in the after hours, but I don't really care about capturing points there. If we can push into that old balance, I mean, the target at that point is going to be, are we going to start marching towards an all-time high? I'd much rather be in that trade than be, caught in another large reoffer around 6,000. So for me, patience is going to be a big thing this week. It is summer. I mean, it's June. It's June 1st. So the volume's going to start getting a little light. I think all of our martini lunch guys are going to be in Montauk and the Hamptons here in the coming weeks. So volume may just fall off a cliff a little bit. And when that happens, a lot of range bound activity. It's a lot of, tighter opening ranges, and we just, and it just gets slow. The tape slows down and we tend to just drift up unless there's actual news that may send us down. So until then, just looking at ES specifically, like I'm looking to play the edges, and kind of going to be using last week's value area high and value area low, which is pretty tight, to be honest, about 40 points of range, let's call it, to just guide me on which side of this, which side of balance who may be in control on which side of this balance rather. So I wish there was a better story to tell you guys, but until we leave this balance, and it may be violent when we do, I haven't really changed my plan. In fact, my pivot even from last Sunday actually was pretty good to the upside. Basically still hasn't had a chance outside of last week's open to even make an attempt to come back down to it. And I don't really care to want to be too short outside of intraday moves and scalps and things until we kind of fall back inside 5800s. It's just tough to get too bearish right now with summer and everything else going on. it's hard for me to look for too many shorts outside of us falling back towards those liberation day areas, which would be back inside 5,800, and more specifically us filling the gap and falling down back inside of what is now going to be May's value area low, which basically would be this gap fill here. So we'll see. But for the time being, guys, play the edges is how I'm reading this. And this is the same. You're going to hate me for this entire evening, but it's the same story with all of the big four. Everything we're going to talk about tonight, they're all in balance, unfortunately. Everything just kind of is. And I hate that, because it mean you're really just taking a wider range play and then using things like order flow and others that are going to kind of guide you day by day, market generated information to kind of guide which side of this. But it's just hard to have a true form of trend right now. It's just a 200-point balance, not even 100. Let's call it 100 to 150-point balance for 3 weeks. So when we do finally break it, I'm sure it's going to be violent. I'm sure there's going to be a great trade if you're on the right side of it. But until then, for me, it's scalping, getting my points, and calling it a session early. Hopefully, that's always the dream when you do this full time. Get those points and hopefully be out by the Euro close and doing something better with my day. But I will be back tomorrow afternoon to trade the close with you guys, of course. But yeah, we got about 3 minutes until the open. We'll watch the open on my execution chart, actually see. But while we're hanging out, any predictions for tonight's open? Are we going to gap up, gap down? Are we going to be opening right around Friday's settlement? Give me your thoughts. Love to hear from you guys. Play the edges sounds like you want more than a tick. I mean, yeah, but when we're in this much of a balance after 3 weeks of it, this goes back to even when I was doing the show and we were talking, the all-time highs. Like there's not like a true, I mean, I just don't love kind of initiating in the middle of balance. For me, it's just very much going to be driven around, what order flow is telling me, what volume is telling me. But for the most part, if you're on a longer time frame, I mean, you're looking for sellers to step in near the highs of this balance, and you're looking for buyers to continue to defend, the 5850s. There's not much to do until the market tells us otherwise. That's what it's been telling us for 3 weeks. So yeah, the edge can get tighter. So playing the edges could still be playing last week's value area low versus the value area high, which is only 40 points. But you kind of get what I'm saying. Last week, we basically filled in the structure of the previous week, and now the point of control for the last few weeks is basically around 5,900s. So let's see. We got about 90 seconds until the open. Before, I don't want to jump into NQ and then jump back here. So yeah, you get chopped up. That's what happens when we're in this type of range. But there was some decent trading opportunities last week. There were moments when there were some great trades. Obviously, the big short in the early parts of Thursday session post NVIDIA earnings, and then there were the two big moves on Friday. But unfortunately, they came later in the session than I was unfortunately not sitting at my desk. In fact, I left the desk, and that's when things started moving. Of course, it's always how it happens. So we'll jump to my ES execution chart here, and we'll hang out for the next 45 seconds and watch the open. But let me see the results of the poll while we're hanging here. So far, 34% say gap up, 39% says gap down, 27% says flat. I didn't see a lot of news, anything really over the weekend that I think gives a discernible edge either way, but we'll find out here in about 20 seconds. If I was just a betting man, I'd say maybe a couple points of a gap down, if anything. I'm just going to assume around settlement, but my lean is just slightly, maybe we have a tiny gap down that gets filled in the first few minutes. I don't know. We'll find out here in 3 seconds. Oh, gap down. The gap downs have it. And that was bigger than I expected. About 10 points from where we closed on Friday. So, which is, what is that? We'll watch this for a second. So far, buyers coming in and trying to fill the gap very quickly here in the early parts of tonight's session. NQ gap down to around 21,300s, and same thing. Some buyers showed up immediately and are trying to close this gap quickly, but about a 2 to 3 point spread on NQ thus far. But yeah. Oh, we gap basically to last week's value area low, around 98s, 96. So shocker, which would be playing the edges. It would be getting long at Globex right here on the open and looking to ride it back up to 59.30s, which is just, that's kind of funny. What a tight value area last week. Like you just had that. And I guess this is really NVIDIA, and then this was China. Otherwise, we were pretty much in a perfect D all week. You take those away. So let's jump over to NQ. How about that? Which doesn't look very different than what we were talking about on ES. Just slightly different numbers here. We didn't make the run up to 22,000. I think everyone was kind of looking and hoping and praying. But on a longer time frame, the reoffer at 800 made sense. If we go back to some of these areas, going back to even the post-February OPEX, there were some value areas up here, which is basically where this rally died. Right here around 21,860s. So it kind of made sense when I was watching the overnight, and I didn't have the cojones to want to sit there and start trying to short it after a mixed bag of NVIDIA earnings. I mean, they were positive, but you just never know. For some reason, NVIDIA always seems to sell off the following day, or the market tends to, even after their positive earnings. I don't really get it. But yeah, on the Nasdaq, the same thing is true. We're in balance, albeit a wider balance than obviously we were seeing on ES. But for the time being, the 21,100s area up to the 21,500s is basically going to be your range. I think it might have been the early parts of Friday's session. I wanted, and when it looked a little weak, kind of off the open, we started selling. And after the overnight, you were kind of watching it. We were trading around the kind of the mid 250s, and I was watching and looking things on volume profile, and I just was like, I'd love to see that flush to 21,100s. It kind of made sense to just go retest areas from the previous week that we hadn't kind of retouched. So naturally, once that happened, I wasn't at my desk, same thing, and we rebid in the afternoon during power or pre-power hour, and then basically came all the way back up once again inside of last week's value area. In fact, the last 3 weeks of value areas where we closed. So for the time being, as I was saying, it's the same thing for ES. It's hard to have too much of an edge outside of looking to buy around the 21,200s and looking to fade, potentially reoffer around 21,500s once again. If we lose this, like I said, I need to do this now that we're back to the all-time high area. But your next value area is to the upside. And this would basically be the week of that February OPEX, where we fell down the rabbit hole and started selling ever since. But another area to have marked on your charts is going to be that 21,850s. And then the other one is up towards the 22,000s would be the top edge of that February OPEX value area before we just started flushing. I'm going to fix this. I'm going to have it pull more data. I think we've kind of fixed the growing pains with this chart book as I was creating this for the show, but I think I can handle a couple more months of data to actively make this chart a little more important now that we can talk about those old volume profile weeks volume profiles going back to like January, December, those areas we were trading in around these prices that will make sense to continue to talk about, and even maybe give you guys a better picture of a more all-encompassing volume for these prices. So I'll fix that for next Sunday. And how would you guys feel if we randomly start having some guests on Sunday nights? Keep things a little casual, have a little fun with some more people. Any thoughts? Chat on how that would be. If you guys would enjoy that, having another voice versus me just talking nonstop for an hour with only my perspective. I'm curious to hear if that's something you guys want. Do we keep it simple? Do we bring on some guests? Do I make other people tell you how they're looking at the week and prepping for the week? extreme jealousy. Please do not have guests. Thanks. I don't know. It might be fun to hear some other guys, some of the other crew from the Order Flow Labs fam coming in, hanging out with me on a Sunday night, me taking away lovely time that they're probably spending either at charts, trading the Globex Open, or spending it with their family. I think it might be fun to have another guest or two on here every once in a while. So we'll see how that works out. Yeah. Look, right behind the scenes, they have a poll. Should we have some guests on? Nah. That's such a Sunday poll. It's so relaxed. All right. So as I was saying, to the upside, 22,200s and the 21,850s is the areas I'm watching. If we can break this balance to the north side and then above that 23,000 and everyone gets a new all-time high, celebrates, everyone's 401ks are very happy for the time being. Everyone can start cashing out their retirement, I guess, at the all-time high. I think of that with my parents, but it always makes me laugh. It always seems like end of month flows, like my 401k is like buying around the all-time high when I'm paying attention. It never seems to catch the dips down to 4,800s. Makes me laugh, except my self-managed one. But for the most part, to the upside, like I said, those two levels. To the downside, if we want to go talk about that same gap that we were talking about on ES, that still is remaining down here. It would basically push us below 20,215s. In fact, would push us back towards to the downside. The Liberation Day high still sitting down here around 20,000 evens is an area to still be just expecting to be defended. And that basically marks the top edge of the old balance area that I think everybody and their mother actively hated, including myself. Yeah. I guess in hindsight now, it's harder to call this a balance area because we retested about half of the Liberation Day move and then the good time to buy day. Like, I guess that was more the balance range. And we got about a little below half of it and then just took off and we're off to the races. So harder to call it a balance, but it just seemed like after that, we were just started trending upwards. But that's the area to the downside I'm watching. Unless we can get below 20,000 evens, same thing. It's hard to get too bearish. It would not shock me to see with rogue Trump headlines still in the market day in and day out, and with potentially lower volume in summer. I mean, it wouldn't take us a lot to go fill this gap down here and maybe even go retest the breakout of Liberation Day, perhaps even as low as good time to buy day high. We would be around 19,400s. So just some areas to just have in case you got a more violent week to the downside and we retest some of these value areas going back the last month or so into the end of April and early parts of May. Just important to sit there and kind of pay attention to just where some of those levels are. I don't know if we're going to get any sort of absolute violence in the coming weeks, given it's summer, but we really didn't get a sell in May and go away. We really did just get it is a good time to buy, and all the tariff deals will come into play. So we'll see as we get closer to the end of that 90-day pause and people challenging in the United States court system the validity of the ability to even do these tariffs. I mean, the markets hate uncertainty, so it's not like it gives us another reason not to sell. So we'll see. Summer's going to be weird. That's how I'm looking at it. I want to have short, quick trading days. I don't want to get too in the weeds of sitting here all day and hoping for a headline to move the markets. It may just be a lot of this. Could be 3 weeks of balance and then a week of trend and then 3 more weeks of balance. And here we are in the middle of July suddenly. But maybe it'll be like last summer where we have 13 straight days of all-time highs. We're not that far from it when we, look about how far we've traversed in the last 6 weeks. It's kind of wild how quickly this has recovered from those lows. So we'll see. So far, gap down, still holding. Haven't quite filled it just yet. Thanks, Stowe. Had to rep the U of A hat today. Tonight, college baseball, they are playing in the regional final against probably Cal Poly. I didn't see the score. I think that game's starting right now. But they are they're in a good place to make it super regional. So we'll see. But yeah, repping my alma mater today. Let's jump over to Crude, which is also, unfortunately, in a multi-week balance. So if you've seen a common theme here, we're in a balance within a balance, below a balance, inside another balance. And Crude, unfortunately, even with its 2% move up to start tonight's session with energy. So energy futures seem to be well bid. In fact, so was Lean Hogs. No, Lean Hogs isn't open yet. That was Friday. Yeah, natural gas and crude both gapped up and are up about 2+%. Lovely. But crude, just like we were talking about in ES and NQ, is in a 3-week balance, just below another balance. If you guys remember the old balance area, basically between 60, you can call it 65, 64s. I don't know anymore with rollover. I'm going to say it's 64s just because it makes this whole theme of balance within balance sound better. But basically crude in a 3-week balance, the same thing inside of a larger balance, going back to the early parts of April, that balance range basically between 64 and 56. And now a much tighter balance. Let's call it between 60, 50s, and let's just call it for good round numbers here, 63s. So just like we've been talking with ES and NQ, what do you do? Well, you look to kind of not fade this, but you try to play this the lower ends of balance to the higher ends of balance. So the value area is basically what I'm talking about here. So if you could find a decent long somewhere around the 60, 80s to call it 60, 50s, nothing wrong with trying that long for a traverse of last week's value, the last 2 weeks of value, and 3 weeks of value up towards 63s, which seems to be an area that has a lot of sellers present, going back even as far as the middle of April, when we kind of peaked above 64s, came back down to 63, and then had a violent sell to go retest the bottom edge of that wider balance at the end of April and early May. So the same thing is true here. It's a balance within a balance below another balance range that is basically 65s to 70s if we're talking about the value area. So until we kind of leave this, I mean, that's kind of what you got to do. We're at the top edge of the larger balance in theory, kind of being these 62s, 63s, where a sell could come in at any time. But I hate selling crude for some reason. It goes against everything I want to do is ever be bearish crude oil in the 50s for some reason. I know it can go negative and all the other fun stuff, but I'm hoping that this has been at least a temporary floor for the time being in crude oil in the kind of mid to low 60s, and maybe we can fall back into that old balance, which is basically this box here. Like I said, okay, this is a tighter value area, so they're going to call it 66 to 70s. But this is a auto plot from Order Flow Labs. It's actually plotting a gap, but this gap itself is actually a balance area going back even to parts of late last year and into the end of last summer when we were trading in basically this range. So let's see, can we leave this balance and go to the other balance? That remains to be seen. But for the most part, crude gapped up, constructive for possibly us leaving this balance area and maybe peaking back above 63s to go make an attempt. But if not, I would have no problem kind of looking for longs in the lower parts of these 60s to 61 to 60, 50. Last week's value area low sitting here around 60, 40s. So the same story once again. Unfortunately, I wish we had a trending market to talk about here tonight. But unfortunately, even our lovely precious metal is in balance. So if you hate balance trading, if you hate range bound trading, this may not be your week. Just being honest. There's a lot of indecision, a lot of unknown and possible direction. It's a great week to get chopped up, being that it's the middle of the early parts of summer here, and every major market that we talk about and trade actively is pretty much in balance. So this balance range, it's the same balance range we were talking about when I was looking for, liquidation shorts back down towards 3,000 in gold. I think when we were talking about fading 3,400s, I think like 2-3 weeks ago when we were on this show. But it seems like with the bullishness in equities, like you're kind of selling they're selling the pops in GC. Gosh, I forgot what I was even talking about. And it seems like it's fair to take stabs, with the right, I would say, volume that you're seeing, the right delta. If you're seeing a lot of negative delta come in, if you're seeing sellers step on the tape around that 3390s to 3400s, even 3410s, if you're seeing sellers in that area, I think that's the safer trade than kind of initiating anywhere between 3300s and 3350s. You've just had a ton of volume traded in that area, and it's a great way to just get absolutely demolished when you don't know which way it's potentially coming. But I have no problem looking for a short in gold around 34, provided equities aren't just, steamrolling us to the downside. I have no problem looking to try to fade a little bit of this final consolidation, since we've just basically been blow off topping in gold ever since basically August of last year. It's just been a slow, steady, violent move to the upside. And if you were short at any time, especially going back even I think to November when the birth of my child happened, and I called the bottom apparently by covering a long at 2500s for a few points. But yeah, looking at this, I mean, you just kind of basically, even the last couple of weeks of value area lows sitting here around 3300s, even for a scalp long until something changes. If you see this break of balance, by all means, you should be probably shorting this down towards, 32s, 3100s. Maybe we can go fill some of these RTH gaps that you're seeing on my screen, these blue rectangles here. Would make a lot of sense. I would love to see, since we made a new all-time high, potentially just go retest inside of 3100s down towards 3000. Very, very possible in time, but I'm not saying it's going to come this week. If we're still chopping and balancing in the equities, I would imagine the same thing is going to be true for gold. I just want a decent short for some reason. I don't know why. I tried it a few weeks ago, got a few points, but could never seem to be on the right side of like the bigger, trending moves for the day when gold was selling off. So I don't know. I'm optimistically looking for shorts in gold if I'm going to trade it this week, which we'll see. We'll see. If equities are stuck inside a tight balance, I may look to trade a little gold. But I usually say that, and then it ends very poorly for me. But we'll see. We shall see. So, do we want to talk about YM? Why not? Maybe not too long, because it looks exactly like ES and NQ does. It's a multi-week balance once again. But for some reason, I realized I have data and it populated and it worked. So I built a YM chart, because why not? Why not look at the old YM on a multi-week chart and talk about, just like we were saying and everything else, where do we fade the edges? Well, basically between 4180s, 41,800s and up towards kind of the 42,500s. I don't trade YM. I think I've maybe taken 2 trades in it, but just like we were talking about in the other major indices, it's in a multi-week balance and there's not a lot to do outside of play the value areas. Even look at this. It probably, it's funny looking at this now outside of probably Friday, it probably traded pretty cleanly in a lot of this if you can stay out of some of these consolidation sides. I don't know. Anyone trade the YM? Anyone trade it last week? Probably was some decent trades. But let me see. It is kind of lagging compared to ES and NQ as far as retracing the march up to all-time highs, which is like 4,500 almost. 45,000. I keep saying 4,500s. I'm not used to this many digits. I guess I am, because NQ trading in the 21,000. So maybe I should be used to 5 digits. But yeah, YM's got some more work to do. Unlike ES and NQ, which just seem like they're on the cusp of kissing a new all-time high on America's birthday in July. It's almost too perfect to once again do it around the 4th of July. Because why not? But yeah, not going to spend too much time on YM. I don't trade it, but I just had a good laugh when I was building this. This just seems like a week I'm gonna hate this week. I'm not optimistic about my trading this week. I know what to do. I know what's not to do, but for some reason the candles turn on and then, you forget everything you're talking about doing and you end up taking a couple stupid trades. I was pretty light last week. I didn't trade a whole lot. I had a green week, but for the most part, I stayed out of trouble. I think that's probably why I was actually green on the week, which was good for me because I've been, in the summer, not being in a drawdown is always my goal because I feel like you try to force action with the slower tape, with the less volume, and it's gotten me in trouble the last couple years, and I'm not going to do it again. So you heard it here first. Before we jump to earnings, let's just see. We're making a run to go fill the gap. Still got a few more points here on ES. NQ, same thing, about 20 points to fill that gap too. So I would imagine this is going to get filled, but nothing would buy delta so far in the low volume that we've started this session. Buyers just continuing to try to push us to actually close this tiny gap. Hopefully they do, because leaving something that small always would drive me nuts heading in the next session. So let's jump to the economic calendar. How about that? So a little light this week, actually less than it was 2 weeks ago, or excuse me, more than it was 2 weeks ago, but still some decent things. Next week's FOMC, so we'll have a lot more to talk about as far as them likely not cutting, not doing anything, once again, holding firm, but we'll talk about that next Sunday. On the docket for this week, actually, we have Fed's Waller talking this evening in about 90 minutes. I don't know if that's going to be a market mover, if he's at some, I don't know where he is. I'm assuming either some symposium or he's somewhere overseas. I don't know. But tomorrow morning, after the bell, we will have S&P manufacturing PMI and ISM PMI in the first 30 minutes of the session, followed by Fed's Logan speaking at 9:15 Central Time, as well as a 3-month and 6-month bill auction. The bond auctions have actually been moving the markets a little more than they have in months past. Yields have still been kind of teetering around around a 5% mark for the 20 and 30 year, and the 10-year continues to kind of hover around 4.5. So bond auctions still important right now, still moving the markets, especially when there have been some poor results of the 20-year, I think it was 2 weeks ago. So still good to have these in the back of your mind, know when they're happening, and possibly just be flat for those couple minutes after, let things kind of settle down. The 3 and 6 don't usually move the markets, but weird things have happened in recent weeks. So always like to still remind you those things exist. They're still on the docket, and sometimes they do matter. They matter some days, sometimes they don't. Was it last Monday? Or no, it was like 2 Thursdays ago. I feel like Leo and I were on, and like the 20-year auction mattered again for some reason because of the results. But anyway, on Tuesday, we do have JOLTS, as well as factory orders, and Goolsby and Logan are speaking at lunchtime and a little thereafter at 2:30 before the close. So more lovely Fed speakers throughout this week. Their last week before they once again go into blackout period and give us about 2 weeks post FOMC when they're not doing their global book tour, when every single one of them seems to have a microphone in front of them at any time. Wednesday, we do have Bostic speaking before the bell at 7:30, as well as S&P Composite PMI and Services PMI, followed by ISM Services PMI at 9 o'clock. So I always hate, these are probably 2 of my least favorite data releases because they're right after the bell. And I'm someone that, likes to let things settle the first like 5-10 minutes. But then, this is like prime trade time sometimes for me. And it's like, if I'm not already in a trade that's in profit, I don't love initiating like right before this, or if I do, sometimes I'll hit flatten just to get out before I can potentially, have a 20-30 point NQ trade come all the way back to break even. And I just don't love when they're right after the bell, especially because like I love trading kind of right around that 30-minute period once things have kind of settled down. But it seems like we get a couple of those days this week. And then the beige book at 1:00 on Wednesday as well. Not usually a market mover, but let's see. Thursday, we do have balance of trade, imports, exports, as well as initial jobless claims and continuous jobless claims. But the biggest one of this week, obviously, we do have a 4-week auction, 8-week auction, and then Harker as speaking as well. But then the big event for this week, as I was kind of alluding to, is going to be Friday. It is an NFP Friday week. So we do get that lovely data release that usually does move the markets. So be aware. Friday morning, 7:30 Central Time, you do have NFP Friday. Everyone's favorite data release on a Friday, just to potentially start your weekend off great or ruin it if you happen to be trading on the wrong side of it during that release. Then we do have Baker Hughes and consumer credit at 2:00 on Friday as well. So that is the week. Nothing too crazy, nothing we haven't all traded through many times before. But yeah, we will handle that as well. And then on earnings. So as I was saying earlier in the show, earnings season has pretty much come and went. We will have to wait for the banks to once again kick us off with the following season. But there are a few good names still this week to be paying attention to. A lot of software names and a couple like Dollar General and Dollar Tree that can not necessarily move the markets, but provide a little heat check on potentially the lower income consumer here in the United States. And I'm always curious to kind of hear because they report back-to-back days in the pre-market. And it's interesting to always hear their perspectives and get a gauge on their earnings as well. So outside of them, we do have CrowdStrike and HP as well as Asana. So if you are a single stock trader, you do have a lot of larger software players as well playing coming up for earnings roulette this week. Sprinkler, MongoDB, Five Below, same thing. So in the same family as Dollar Tree and Dollar General. Broadcom reports. And then I don't know about you guys. I'm a big Lululemon guy. I know they report again Thursday. DocuSign. And yeah, it's a lighter earnings week. As I said, we had NVIDIA last Wednesday, and that pretty much marks the end of the ones that will, at the very least, very much move the markets in the after hours and pre-markets. So gets a little quiet now. It's probably the right time as we're heading into low volume summer, but still some decent names if you're a single stock trader or own some of these in your personal portfolios as well. So we'll jump back to the charts and it'll bring it up to everyone's favorite time of tonight's show would be questions. If you got them. Oops, I don't need to do that. I can just minimize it. That usually works. So usually at the end of the show, while we're hanging out and watching the Globex session kind of kick us off here, we open it up to some questions. So if there are any in the chat, you can throw them in. I'm happy to answer anything and everything that you guys want to talk about. So, like I said, we got 3 weeks of balance. And it's hard to have any real edge outside of, looking to see who's in control on different sides of it and just trying to get along with playing one side of the edge of the balance and trying to ride it up into another area of value, whether that's a balance break when we go find potentially sellers a little bit higher or some buyers back towards the Liberation Day highs. So we'll see. We'll see how things adjust. Nick, what is your take on Bookmap? Thanks. I don't actively use it to take trades. I do have it on a screen randomly throughout the week. Some days I like to look at it. But I don't think you need it. Just depends on kind of how you're kind of viewing visualizations of time and sales. I think there's nothing wrong with it. It can be a very good tool. I know some people that exclusively use it and they are very successful at kind of reading the tape that way, but I don't think it's necessarily necessary for what you need to do to kind of get in and out of trades, scalp things the way I do, very much can be just based on volume and price, volume by time. it can be very, very simple, just different ways to kind of read it. You can even just, have time and sales on your chart and highlight the important things of higher volume, market orders. It just really depends on kind of what you're looking for with it. If you're just looking for a kind of a visualization of order flow, I mean, it works. There's probably better ways to do it, but I don't personally use it to guide my, entries, exits, and things like that. But there's some value there. There's no question. Nick, what do you think of martingale for day traders? I feel like it saves me from mistakes and drawdowns and have helped me get payouts, but also leads to blowouts. So I am in the same boat of, yes, it has whatever you want to call it. So martingaling's a gambling term, but dollar cost averaging, adding to losers at times. I mean, it's all in the same family. There's a time and a place to do it. And there's a lot of times it's just a great way to blow your account. And I'm not a fan of doing it in the context of, it's one thing if you're scaling into a position, you're trying to build around a specific level. It's another thing when you are shorting this move Friday afternoon and you just continue to add at whatever level that is giving you an indication, and you're just trying to, hey, if this comes back, I'm just going to put my stop at break even at that point. I just want to get out of this trade. If you're doing it in that mindset, like you're just adding against a move when the trend has clearly changed, or when we're coming into an area like Friday, when this is stupid, but it's end of the month, as well as a Friday, and options activity can also influence a lot of things. So when you're seeing a large SPX strike, for example, like down here, not seeing any sellers kind of continue to push us below 5850s on the SPX chain, and we're starting to build volume and seeing all this positive delta start to build here. I mean, there's not really a short at all, probably, until you could maybe say, maybe I'll take a stab around the opening range mid. But if you're adding against a move like that, I mean, you're better off just, honest to God, just getting out of the trade, obeying your stop. So there's a concept for it, I guess, when it makes sense to, when I guess they're different things. You're adding against a loser is one thing. Building into a trade that kind of makes sense and then still obeying stops is a whole nother thing that you probably, there's no issue with you doing. But when you get into trouble is when you're adding against a move, or you're continuing to add to a losing trade instead of reevaluating how has the tape changed. Is the original idea I got into this trade for, is that gone? Because if the answer is yes, then why have you not already exited the trade and are kind of just waiting for things to settle, reevaluate? Why are you continuing to add against a move that no longer is validated for the original trade thesis that you were looking for, whether it was a short as we were consolidating here for a good 30, 40 minutes and you were looking for that? Well, once we kind of popped the edge of whatever you want to call that 5-minute range that we were trading in, it probably makes sense to exit, not add. And I'm guilty of it myself. I mean, we all have those tilt moments where you just refuse to accept that you're in a losing trade. But I will say you can get into, when it works, you can get into a lot of bad habits thinking it's going to be a way to bail yourself out of a trade that's moving against you, because maybe you just happen to, have enough drawdown or margin or whatever to tough it out. But if you're someone that's, scalping in and out of, 10, 30 point moves in NQ, and you're in layman's terms, you're better off just exiting the trade than trying to add and continuing to take heat and potentially putting, your account at risk, your own capital at risk. I'm not a big fan of it. If you guys have ever seen, me trade, a lot of the time, I mean, I'm not great at scaling into positions because of just the way I kind of scalp and get out of them. I'm very much like on ES, sometimes, jumping in at my full clip and, taking what I'm seeing and then exiting the trade and either calling it a session or reevaluating if there's another one. When I sometimes scale into positions, like, adding, or sometimes with micros even, where it's just like I refuse to kind of believe that the area that I originally, was expecting it to hold, I'm just continuing to add for some reason instead of just stopping out of the trade because it was already invalidated. So, you get away with it sometimes, I guess is what I'm saying. But it's not a long-term strategy that's going to work because you're going to get caught on the wrong side of a trend day. Not everything is going to be a range bound balance. I know this is a longer time frame, but something where you can kind of get away with it because we are range bound and hey, I can keep adding because in theory sellers could step back in here, or buyers are, maybe you were the Trump headline came in and you were catching this knife way too early. Like you bought in initial balance low, and then you saw us start to kind of rebid off 5870s, and then it just things can cascade, especially when the tape's moving quickly. There's no need to continue to add against the move. You're better off just flattening out. When you get in trouble is obviously going to be in range bound consolidations and those Friday drift up type price action where it gives shorts hope because we kind of consolidate, we drift down a little bit, but it's almost like it's bull flagging. And then you continue to kind of add and you're just waiting for it to turn, and then it doesn't. And then it just absolutely rips to the upside. So I'm not a big fan of that strategy. I think it can get you out of trouble every once in a while, but it really is like playing with fire. You're better off scaling in still with an area that proves the trade thesis wrong, where it's like below this, it's a stop out. It's not another ad. So that's kind of how I've always thought of it. I don't think it's a good strategy long term. There's nothing, like I said, it might bail you out once or twice, but it's not something that's going to lead to you potentially being profitable. I know it was a very long-winded answer, but there's a couple ways to take it, I guess. Nick, can you tell us how to get the delta flip? If you're talking about these lovely little stars that are on my chart, it's an indicator built by the Order Flow Labs crew. So it is basically looking for those variance kind of flips in delta itself on the tape, depending on a certain amount of volume and kind of the speed that it's happening in which that change takes place. So if you're curious, it's not part of the freemium, but if you've never played around with their tools or you have never really watched us trade the close with some of these indicators, they are really cool. They're built by a lot of different a lot of people that are smarter than me and have actually built some really awesome things, but a lot of it is time and sales based, volume based, delta of said volume base. So there's some really cool ways to kind of understand what's actually happening, in the auction and what's going on the tape, and just different ways to visualize it so that you don't have to, in theory, stare at time and sales and try to make sense of it, or try to be, reading something like, a volume by price like this and not really understanding what's happening. So in addition to obviously a ton of these indicators that they've built, there is thousands of hours, maybe not thousands, hundreds of hours of educational content. Leo's somewhere in a cave creating more content, probably, as I said, thousands. But no, there's so much EDU content to not only, spit out things that can help make you a more effective trader at understanding what's happening in the auction, but tons and tons of material that helps you really, really kind of understand, what's happening under the hood of, there's a lot of indicators out there in the space, and it doesn't really explain much to you. It doesn't necessarily give you like a buy and these aren't buy and sell signals by any means, but what's the education as far as like what's happening under the hood when some of these things actively fire, and then understanding kind of the theory behind them and the data behind them. That's what can make you a more effective trader. When to apply when some of these things fire is kind of the end goal. So says it might be thousands. Is it thousands? I mean, I wouldn't be shocked. I probably am due for another deep dive into the EDU section. I'm sure some things have changed since the last time I sat there and listened to Leo yell at me on how to read the tape more effectively, but it probably should be thousands. If there's thousands, it's worth the time. No, I don't think it's thousands, but there's a lot, and it's really, really good stuff, and it's interesting too. And it's not boring guys behind the scenes talking just talking a bunch of gibberish. It's stuff that actually makes sense, and it's easily digestible. If you've ever seen me trade, or anything about me, I am not the smartest guy in the room by any means, but it's digestible enough that anybody could pick it up and have a decent understanding of what's going on and what's happening. So what would be your ideal way to manage your risk? So it's a kind of a loaded question because it really depends on, the person. Um, for me, I think XY and I have talked about this on Trade the Close before, but I kind of need the monetary value side to help me manage risk and not be too much of an idiot when I trade and make mistakes. And so for me, like having a hard dollar value daily loss limit, not necessarily points, and having things still in dollars and cents, it sinks in more to me. So for me, managing my risk always comes down to a certain amount of capital that I'm willing to risk in a given trade and a given day. Because it helps me keep it real. Because you guys, if you guys didn't know, I worked a 9 to 5. I've not been a full-time trader. I've been doing it for about 2 years, but it's still important for me to kind of keep myself level-headed and keep everything real for me, because I know obviously I've done well enough in this that I can replace the 9 to 5, but it still keeps me honest enough to manage my risk, because I know what I'm willing to kind of take on any given trade. I know what I'm willing to call it a day under, and that could be a few $100s, could be $1,000. And I know some days I'm not willing to risk more than, $2,000-$3,000, and I'll call it a session if I'm read in that. So for me, that's how I kind of manage risk, as a dollar value. And then I equate my stops, my entries, usually based on, ways around that. So if I'm going to be trading a 2-lot, 3-lot on NQ, I know I'm willing to risk, 500, 800, depending on where the entry is. And a lot of that will be defined on the amount of lots I'm putting on, based on the where I can kind of define risk in my entry. So if I'm looking at something like the opening range mid, it may be depending on where price action was traded, or it's a previous day close. A lot of my entries are going to be defined on order flow, based on, what am I seeing as far as buyer, who's in control at a certain level, or if we come up and kind of touch the opening range mid. If we come up from the downside, that's a little different than us coming from the top side and kind of touching it, as far as how far above or below I'm willing to kind of, risk for this trade. So a lot of my entries, exits, stops are going to be placed on a dollar value, based on how much I can potentially risk on an entry, or somewhere around a piece of MGI or a piece of order flow that's kind of giving me thoughts on this trade thesis potentially, working out. You guys may have seen the afternoon. I let things go sometimes. Like I'll miss trades. There's nothing wrong with that. There's always another one. There's plenty of opportunities. So for me, defining risk, a lot of it is dollar value, and then what I potentially, not necessarily what I could potentially make out of it, because I'm still very much a scalpy trader. So it's me still, how do I define it with a dollar value and a specific level that I know I'm wrong? Because I've gotten a lot better than when I first started trading on kind of accepting the loss, if you will. And a lot of the time, if I'm seeing, sellers on the tape, if I was trying to get long at the opening range mid, and we start just peaking below the low, and I see them still on the tape, and it makes sense that we could potentially take out like the initial balance low or the previous day low, I'm going to get out of that trade. So it's a little bit of how I do it. What do you think of sizing slightly after a losing trade? I usually size slightly after 2 losers. I think you mean downsize. Yeah, there's nothing wrong with that. I think it's a good way to kind of get your confidence back and continue to kind of put your strategy in play without necessarily putting more capital at risk. If I am a fan of that, if you also have had a red day, had a red week, or coming out of a drawdown, like there's nothing wrong with sizing down and just kind of continuing to get the muscle memory back on what it's like to take a good winning trade, and just to validate that you're reading the market well. If you're continuing to take losses after even sizing down, and that's where maybe it makes sense to take a couple days to just get away from screens for a little bit, take a break, reevaluate, come back more with fresh eyes, rather than, even if you size down, you could still be kind of tilt trading. You could still be trading, trying to just, get a winner because you've lost 3 trades in a row, whatever it is. So yeah, if you're on a little losing streak, or you've taken some losses early in the session, there's nothing wrong with sizing down and just trying to kind of, work your way back a little bit, versus maybe based on your drawdown or your margin or whatever. Like okay, I took 2 red trades based on, my risk for the day. I only have 1 trade based on my sizing and stops and things left. The other theory could be, well, size down, see if you can, take another couple good trades and give yourself a little more room as far as points and risk if you still wanted to sit there and keep trading. But I'm a fan. Even after, rather than sizing down for me, I'd rather take a day, take a week, whatever, than continue to some days you're just not reading things well. And maybe you are, and you got crap luck. I mean, I've had those days when, you're short and you get stopped out by a couple ticks, and then the reversal happens. And, that was your, 3 strikes and you're out, or whatever rule you kind of abide by. So some days are just going to be like that, where your timing is just poor. Your entry wasn't even bad, but you just were mistimed a little bit. You got in a touch too early, which usually is a kiss of death sometimes in this game. Just being early is you can easily be wrong. So yeah, there's a lot to it. Did Stowe move to Asia? No, he's just the absolute god lately at trading the Asia session. He's somehow he's mastered Globex for some reason. It speaks to him. So the Asia session has he's done well in recent weeks, I know. So he might be moving to Asia. I don't know. Maybe it'll be more effective for his some days that he just seems to, I'm having dinner and I see and Stowe's taking a 30-point NQ trade out of nowhere, and I'm like, has the market even moved 30 points? That's crazy. He's a big fan of the Sunday Asia session. So I will let him do that. I'm still net red since 2020 when I started touching futures, trading anything outside of New York Open to New York Close. So I don't know if I'm ever going to break that cycle. I'm not going to start it here tonight. So with that, let's do a quick recap of the simplistic ES prep, and then I will let y'all get out of here. Everybody can go enjoy the rest of their Sunday evening. But quick housekeeping. If you haven't already, please do hit the thumbs up button. It does help me. It does help the stream. Helps more people find us, hang out with us here on Sunday nights. So if you haven't already, smash that thumbs up button, hit subscribe. The NinjaTrader team is continuing to push out great content for you almost every day. And yeah, I never saw the results of the poll. Let's see. 64% say we should have guests periodically on the Sunday Open. So I'm going to take the majority rules, and every once in a while, we'll have somebody join me. So it's not just me screaming into the void for an hour. But let's talk about ES real quick. As I said, 3 weeks of balance means don't play the middle. So the large, what is likely the option strike sitting around 5,900s for larger institutional players is still going to act likely as a magnet. So the logic would be play the edges, and when we're drifting towards it, look to get along with those buyers or those sellers as we are moving momentum towards that point of control for the last 3 weeks. But for the time being, I'm going to be looking to fade the edges of this balance range. So the lower side of it being 5850s, 5855s on the ES chain, ES book, excuse me. And then fading this up towards 5970s. If we got above that, though, I don't want to step in front of a march towards the 6,000 strike, which logically probably means a lot to some bigger players out there in the space. So if we get above basically 2 weeks ago's value area high, I probably don't want to be short on that freight train move about 30, 40 points higher, what is likely to go retest last week's high as well. So with that being said, thank you guys for all being here. Thank you for hanging out. I always very much appreciate it. Thank you guys for chiming in, asking good questions. Really makes this stream much more fun. But the whole team will be back tomorrow. You will have Mr. Crudele, you'll have Tanya, you'll have the man, the myth, the legend, Jim himself, the whole crew, Shy Girl, everybody will be back to bring us some great content this week. Hopefully what is going to be a great trading week. I will be back tomorrow afternoon to trade the close with y'all. So everybody have a wonderful evening. Everyone enjoy the rest of your Sunday and weekend. Trade safe if you are going to be trading the Globex session with Stowe. I'm sure it'll be a quiet one, but hopefully everybody has had a wonderful weekend, and I look forward to hanging out with you guys this week and trading the markets, trading the close. So have a good night. Take care and be safe, y'all.